So there is an improvement here. I mean, this is a survey where you speak to senior executives in key sectors of the economy, building, manufacturing, retail, wholesale, motor trade. So why did we have an improvement in the quarter, firstly?
I think a slight improvement. I think that's the right word. 6 points up, but in the second quarter we dipped by 11 points. What is important here, Sam, is the fact that on balance the index is still in net negative territory. And what that implies is that there are more pessimists than there are optimists when you think about the respondents.
Who are the biggest pessimists right now?
The biggest pessimists would be in the manufacturing. I don't think that's a surprise. You think about it, if you're an exporter in that particular industry and you export to Europe, well, it's not helping that Europe is in recession. Neither is it helping that the Chinese economy is slowing down. So within that particular sector of the economy, clearly the export industry is struggling. So they're pretty downbeat at this stage.
Yep.
But also, to some extent, manufacturers that are selling into the domestic market. Clearly what happened in the third quarter is that actual sales disappointed relative to their expectations. So what that means that they actually sold out of inventories and they didn't produce new stock. And obviously that knocked sentiment somewhat.
New vehicle dealers, the big improvement in sentiment there. In fact, that index for them, that sub-index sitting at an 18-month high of 79. Exactly. We've seen vehicle sales steaming ahead, perhaps a loss of momentum in the latest numbers. But what was your sense when you were speaking to these dealers?
No, there's a good story. An index level.
And why is that? I mean, is this consumers on the healthy space, or are they getting cheap finance?
Well, it's a combination of a lot of things. I think interest rates are low. That's certainly beneficial. What is also important here is that apparently in the sector, good quality second-hand cars are quite scarce. So people are actually forced into buying new vehicles. And as it turns out, new vehicle price inflation has been very little, if anything. In actual fact, new vehicles are getting cheaper. You put all of these things together, I think it is a good story. If you think about it, we survey about 50 new vehicle dealers. 8 out of every 10 is upbeat. So there must be a good reason. And it's reflected in their sale volumes. That's still doing relatively okay.
Now, of course, another sector which is very much geared towards consumer spend is the retail space. And, confidence there, a huge drop, 22 points in quarter two, and improving ever so slightly, as you said, by 7 points in quarter three. What's the sense is the outlook for retailers right now?
Well, it's interesting in that sector, you can almost talk about a two-speed sector if you wish. If you're selling semi-durable goods, clothing and footwear, a very good story. Confidence levels are very, very high. Volumes, sales, profits, good. If you're in the business of selling non-durables, not so good. If you're in the business of selling durables, to a lesser extent. So once again, it depends on the particular segment in that sector. If you think about prospects, well, it all depends on will the consumer keep on going. And I think that's an interesting debate to have. My own view would be that growth in consumer spending will still remain robust, but not as strong as what we saw 12 or 18 months ago.
So this is an index that you've have data for almost 40 years for, and looking at it against economic cycles, and often using confidence indices as leading indicators. What would that indicate to you about where the South African economy is right now? Well,
if you go back to the headline number, it's 47. If you average it out over the second and third quarter, the index level is 44. That's much lower than the 52 in the first quarter. So once again, net negative territory, more pessimists than optimists. That kind of index level of 44, 45 is probably consistent with an economy growing somewhere between 2–2.5%.
Putting in perspective, 2008 or 2005 was sitting above 80, almost 90.
Yes, exactly. So we've fallen a long way, and it's reflected in an economy that has slowed down quite a bit. Just look at the most recent GDP data, excluding mining last week, showing 1.9% annualized growth. For me, it suggests that the economy, the best that we can probably hope for is growth of somewhere between 2–2.5%. Hopefully slightly better next year, but then again, the index then needs to the rising trend of what we saw in this third quarter needs to persist for that to happen, and obviously that's going to be quite challenging.
So we need some confirmation there for that. Thank you very much for joining us, Ettienne le Roux, Chief Economist at Rand Merchant Bank.